Hey guys, welcome back to the next video. This is basically a past paper that I'm trying to do here, based on income statement. So, like I stated, for grade 12, it's very rare that you're gonna get a full income statement that's expected of you, but you can watch along just to retrieve your memory a bit. But mainly this will assist grade 11s and a bit of grade 10s because there's certain things that you haven't learned in grade 10 like bad debts, and you'll see them here. So um let's begin. So as you guys can see here, this is the Free State September 2020 past paper. So we are going to try attempt this together. I'm not writing the full format for you guys. I have the format here, which I'll show you now, but I'm going to show you or tell you how you tackle each transaction. That's what I'm going to tell you, or what I'm going to assist you with today. So you can see what the required basically. The first one is the fixed asset note, which we're not going to do today. We will come back to it when we do fixed assets or the intangible assets note, and then we'll come back to this 1.1.1. But what the main focus for today is the 1.1.2. As you can see here, this is basically the format of an income statement. I am not going to draft, as I do this past paper, I'm not going to write everything here. I'm just going to show you how you tackle transaction A, B, C, etc. But here's the format, and hopefully and definitely your teachers will provide you the format of an income statement, a balance sheet, a cash flow, etc. But so I'm just gonna refer back to it a bit, to this format, but I'm not going to write out the full format. Like I stated, sorry for the printing, so I had to just add the extra zeros on the side because some of the numbers were cut out there at the end. Very important when we're dealing with a balance sheet and an income statement. The starting point is obviously your format. But what happens after that? You have to first, before you forget, because majority of the time people forget, before you start and you tackle the transactions, the first thing you have to do is you write out these trial balance amounts against your format. So you have this format, and you have, for example, your rent income. You take, for rental income, as you've drafted out your format, you go here, rent income, the amount of rent income, which is the 126,224. Then you first draft, your starting point is your trial balance amounts. Before, the moment they say start the question, that's the first thing you do before you tackle the transactions. You will forget when you start being overwhelmed by the transactions, and then your whole income statement will be wrong because this is the starting point. Remember, financial statements are for the full year. So if you only tackle the transactions, you don't pay attention to the trial balance amounts, your financial statement won't be complete. So it's very important you start with this first. Next thing is rental income. So the rent was received up to January 2020. Take note, the rent was increased by 12% on the 1st of August 2019. That's very important. Our financial year end is 31 December 2019. We've received rent until January 2020. That means we have rent accounted for in this amount for 13 months. Therefore, in that instance, that extra 1 month has to be removed. But how do we calculate this? So now we're going to get a bit of some maths brought into the picture. So the bookkeeper accounted for 13 months of rent instead of 12, so 1 month must be removed. So now we're going to do a bit of algebra, right? So you take that amount that's found in your trial balance, right? And you say the 6 months, because initially, so basically from the 1st of January till 30 July, that's 7 months. So this becomes the 7x, all right? That 7 months had no increase added to it. So that 7 months is just plain. It's a full 100%. But then from the 1st of August until 1 January, because we've received it until the 1st of Jan, until January 2020, which is the end of Jan basically, then that accounts for 6 months. So the 6 months is not a full 100%, it's 112 because it was increased by 12%. So we say 6 months times I want 112, I have 100x. Then you solve this in your calculator and you get 6.72x plus 7x. And you know that we add all the x's and we put all the x's on one side and all whole numbers on the other side. And then after that, we divide by that amount, and our x amount is 9,200. However, January accounts for the the rent that was increased by 12%. Therefore, what's going to happen is you don't end here. This is not your final answer. So your final answer is going to be 9,200 times 112 over 100, and then you get your answer to be 10,304. And then you take this amount from your trial balance and you subtract the 10,304. Very important. Portion is consumable stores on hand, transaction C. With consumable stores on hand, it's very important we focus on the used. We want consumable stores on hand, consumable stores that were used during the financial year. So you must be very careful with when you're reading so you don't fall for the trick. It tells us that the consumable stores on hand, or the consumable goods used during the year, were the 54,000. Therefore, don't fall for the trick. Under your other expenses, you just pluck in 54,000. This 54,368. Don't fall for the trick. If they said this is how much was on hand, then you would take the amount here in your trial balance, subtract what was on hand to get used. So don't fall for the trick. What goes to your income statement is the used amount, not necessarily the amount on hand. So don't fall for the trick. Then they say there's no trading stock surplus or deficit, so we don't have to worry about that. That's good for us because that's one less thing to worry about. Bad debts, they tell us here that amount, 8,360, must be written off, and the provision for bad debts must be adjusted to that 10,480. In this instance, it's straightforward. We just take the bad debts amount that we find in the trial balance and we add this 8,360. That one's a straightforward one. Provision for bad debts, on the other hand, which I said in varsity, we refer to it as allowance for credit losses. For the income statement, what we care about is the movement. We deal with the movement when it comes to the income statement. So what's very important to understand is you take your trial balance amount, which is your 13,050, then you subtract the amount that it has to be, must be adjusted to that 10,480, and the movement would be the difference between the two amounts. And since it's a decrease, it goes to operating income. Why is it a decrease? Look at the introduction to financial statements. I'd explained this. So once you get that part, this will be very much easy and straightforward for you. Transaction E speaks about a fixed deposit. And fixed deposit is a financial income, so that would go to the balance sheet. So why would we care about the fixed deposit? Because it gives us interest income, which is interest on fixed deposit, which now is an income and ends up in the income statement. So they tell us here that interest on fixed deposit is earned at 8% per year, and we take into account that the fixed deposit was increased by 30,000 on the 1st of September 2019, and this transaction was recorded. Meaning this 55,000 Rand that we have here includes this 30,000 Rand increase. So when we want the portion of the fixed deposit in the beginning of the year before we increased it by 30,000, because it was already accounted for, we say 55,000 Rand. I have it here. 55,000 Rand, yes, minus 30,000, and we have 25,000 Rand. The 25,000 times 8%, 8 over 12, because from the 1st of Jan 2019 to the 31st of August, we had 25,000 Rand fixed deposit before we increased it by, another 30,000 Rand. Then on the 1st of September 2019 to 31 December 2019, then it became the full 55,000 because we increased it by 30,000 to get to 50,000. So 25 plus 30 gives us 55. Times 8% times 4 over 12 and get that amount. When we add these two amounts, we get the 2,800, and that becomes your interest income. Very important in your income statement, this amount is the amount that goes to your total column. So because since your interest on fixed deposit is already 2,200, meaning the total amount should be 2,800, meaning you say 2,200 plus 600 Rand, the difference between the two. Don't put this 2,800 plus 2,200, that will be incorrect. So this amount tells you what the total should be. You look at your trial balance, what the trial balance already has. We check the difference between the two and we account for that. Next thing is insurance included. Very important. By the time you see the word insurance, always know that insurance will be always paid in advance. It's an expense that a company will always pay in advance, which is a prepaid expense. So therefore, we mean we have to remove it because it does not relate to the financial year, a certain portion of that amount. Because they tell us they paid a yearly premium of 9,900, which accounts for 1 August 2019 till 31 July 2020. When we look here, it tells us it's a prepaid expense. From the 1st of August 2019 to 31 December 2019, it relates to the 2019 financial year, so that part we keep. But from the 1st of Jan to 31 July 2020, that relates to the 2020 financial year, therefore we remove that. Take this 9,900, we divide it by 12, so we get it per month, which is 825, sorry. We times that by 7, and we get 5,775, and this amount we subtract from our insurance amount. So you take your insurance amount here in your trial balance and you subtract this 5,775. Well, then transaction G just states that a business sells plastic bags to its customers at 50 cents each. The profit and loss on the sale of the plastic bags reflects the following. Is that the cost of the plastic bags purchased is 51,200. The cash received from them is 56,600. And then they tell us the company uses a periodic stock system and that the reversal on hand at the beginning of the year is 5.7, and then the bags bought on credit are 12.8, and the stock on hand is 3,600. This is a very simple transaction. So how we deal with this one is transaction G is right here. So we take the 51,200. This is the cost of plastic bags that are purchased. We add 12,800, which is the bags that are bought on credit, right? And then I forgot this one. We add the 5,700 as well, reversal of the stock on hand at the beginning of the year. We subtract the 3,600, which is a stock on hand. Stock on hand is always subtracted, so that's basically known. And then we subtract any cash that is received from the sale of these plastic bags. Then we get an amount of 9,500 Rand, and this goes to other expenses in your income statement. So transaction 8, depreciation must be written off on equipment at 15% per annum using the diminishing balance method. Diminishing balance, I said the depreciation does not remain constant every year. The more we use the asset, the less the depreciation becomes, because we calculate depreciation on the carrying value amount, not cost price. It's very important. And when we read further, they tell us that the cost price of this equipment is 18,000 at the beginning of the year, and the carrying value is 12,000. We account for the 12,000 Rand because we calculate based on carrying value when we're using the diminishing balance method. So our depreciation calc is straightforward. So equipment is on diminishing, so we use the carrying value. And since it was sold, they go on further to tell us that we sold it to a director on the 30th of September 2019. So for 4,000 Rand, initially, if we were doing the fixed asset note, we would have used this because we would have needed it to determine if for disposal and etc. So, but now we're not there yet. As I said, we will come back for that. So the 1st of Jan to 30 September 2019, it's 12,000 Rand. You times by 15, you times by the 9 over 12 months from 1 Jan to 30 September, and you get the 1,350, and this becomes your depreciation. So that's also a very much straightforward calculation. We look at transaction I, which focuses on the salaries journal for December 2019. They provide us with the net salary, the employer's contribution, and the deductions, not employees. If it was employees' contributions, then we'd only account for net and deductions. Because what we want to account for is we're looking at the company and we're calculating the costs of the company. And the employer, since the employer also has to contribute a certain amount, therefore their contribution should be accounted for. If it was employee's contribution, the employer does not pay when the employee is contributing because it comes from the employee's pocket. Therefore, we would have ignored that. But since it's employers, we account for it. So therefore, you just go to our trial balance and the salaries and wages amount that we get from here, which is the 175,000 Rand. We are going to add 46,000, 9,800, 14,500 to it, and that's about it. So that's also very much straightforward calc. So totaling all these three would be 7,300, and then plus the 175,000. And then we look at the income tax for the year amounted to 180,000. The income tax was calculated as 30% of the net profit before income tax. That's very important to understand. The reason why they give you this 30% or this percentage is for you to use it to assist you in calculating the net profit. So you have to work inversely to get the net profit. So to get the net profit, it's 180,000 times you want 70. Because if income tax is 30, profit before tax is always 100%. Once SARS takes their tax portion, which is the 30%, therefore net profit, the total profit at the end of the year, is going to be 100 minus the percentage of the tax, which is 70 over we have 30, because this 180,000 contributes or relates or is seen as 30%, and then our net profit becomes 420,000 rand. The reason why you're doing this is because they want you to work backwards. Once you get to matric or grade 11, you're going to work backwards when calculating your amount in your income statement. It's not you working from top to bottom. So you are going to work backwards from time to time. So as they tell you in transaction K, they say interest on the loan is the balancing figure. So when your net profit at the bottom of the income statement, here, since you've calculated this to be 420,000 rand, you work upwards and then you use that amount to calculate this interest expense. So that's very important. So that was basically the end of my video. I hope this video helped you a lot. I just assist you in tackling and how to answer a question and how to tackle a transaction. And so I will be uploading the next video soon. Please don't forget to like, comment, share, and subscribe. Thank you.